One of the truisms that virtually everyone has heard is that the rich get richer. Why is that? Well, in modern times, one answer is that families of great wealth avail themselves of family office structures. So, what is a family office? It is a comprehensive team of professionals: the estate planning attorney, the tax attorney, the CPA, the financial planner, the investment advisor, the life insurance agent, the property and casualty insurance broker, and finally the family office administrator. Don't even know each other's names. Why is this so important? Why could having all these professionals meeting on a regular basis be so important to you and your family? There are hundreds of questions that need to be answered every year. Here are a few of them. 1. Have you changed your will and trust since the birth, death, or divorce of a child? Probably not. Your lawyer doesn't know about the changes, and you are too busy. 2. Has your life insurance agent established the lowest costing insurance available in the market this year, or simply used the company he has a contract with? Most probably, he has a vested interest in selling and maintaining policies with his current company, not finding you the lowest cost among 1,600 life insurance companies. 3. Has your CPA run a cost/benefit analysis on your life insurance policies? Probably not. In a sample series of calls made in researching this article, one couldn't locate even a single CPA who had ever received a request of this nature. 4. Has your property and casualty insurance been rate-quoted every year to minimize the cost of coverage for your autos, homes, businesses, and everything else? Have these coverage been analyzed to make sure that the liability limits are sufficient to trigger your umbrella coverage? Probably not. In fact, I was unable to find a single person who had ever had this done even once. 5. Has anyone ever held your investment advisor's feet to the fire, asking him to justify his selection of investments based on the very best returns earned worldwide on those same investment classes? Probably not. In fact, I was unable to locate a single investment advisor who could even name the top 2 or 3 money managers of portfolios similar to those they themselves used for their own clients. 6. Does your CPA allocate the time to actually provide significant tax advice each year, or does he simply prepare your tax return and determine the lowest tax bill after 31st, when it's impossible to make any changes to your financial structure? Probably the latter. You could probably ask yourself hundreds of questions like these, and would no doubt arrive at the same answers. This analysis is virtually never done. But going through this exercise, I'm sure you'll conclude that while this is incredibly important, you would barely know where to start. You couldn't imagine scheduling all these people into a meeting room and coordinating an all-day meeting, watching your advisors justify to each other member of your team the decisions they have made on your behalf. I'm sure you would agree that even scheduling a meeting like this would trigger a flurry of activity by all of these professionals as they scrambled to analyze the actions they had recommended for you, especially when they realized that the rest of the members of your team are going to scrutinize their actions. So why doesn't everyone do this? It's because they are missing a key member on their team. They are missing a family office administrator, a professional who is retained to take on the responsibility of organizing this annual comprehensive review. The very wealthy usually have this professional on their staff, but the regular millionaire, the physician, the entrepreneur, and business owner don't know where to turn. They can't justify the cost of a high-level professional administrator and wouldn't be able to locate someone with the broad experience to take on this task, even if they could afford it. So what can they do? They can retain a family office management firm, a company in the business of providing this service to hundreds of clients on a shared cost basis. 1. One firm engages in comprehensive data gathering, building a portfolio of every will, trust, business agreement, incorporation papers, insurance policies, and investments, along with detailed personal and corporate financial statements. 2. The portfolio is then transferred to the firm's planning department, where their CPAs and attorneys review everything and prepare a list of issues that need to be addressed. 3. Telephone conferences are then scheduled with each of the client's advisors. The client's attorney, CPA, etc. are provided an explanation of the new family office structure being put in place under the direction of the firm. Then a discussion is held on the issues raised by the planning department. 4. Over a period of several weeks or months, a series of comprehensive changes are arrived at, and an all-day meeting is scheduled with the client and all of his advisors. The new proposed plan is presented, and over the course of the day, the client will make his decisions. There is never an issue. 5. The firm's client services department then takes over, supervising the implementation of all the agreed-on changes and additions. What makes this procedure so efficacious is that it is an annual event, possibly even semi-annual for clients, with a great deal of wealth or a lot of activity. And it enables the client to employ a team of high-end professionals at a cost that makes sense. Once the family office is in place, another very important consideration is that most CPAs are simply tax preparers and only incorporate basic planning techniques, if any at all. Firms incorporate very advanced IRS-compliant tax planning strategies that have been used for decades by wealthy families and their advisors, as well as major U.S. corporations, and have made them available to the ordinary millionaire. They work with their clients' CPA and investment people to educate them on these strategies. A typical plan might include the following objectives: to place assets in the most effective asset protection vehicles, to provide a tax-efficient environment in which most investments, including real estate, securities, closely held stock, etc., can experience lower tax rates, and sometimes no taxes at all. To provide business owners the ability to use Fortune 500 type strategies to reduce corporate taxation. To increase net worth and funds available for retirement through compliant tax planning, and to minimize the taxation on these funds when they are withdrawn. Whether you employ a professional family office administrator or do the work yourself, it is essential that all professionals, business people, and people with reasonable wealth conduct this annual exercise, implementing the above-mentioned advanced tax planning strategies and reducing various tax loads associated with one's pre-tax income and after-tax investments can literally change the way you live and, when you retire, there is probably no more important planning work you can do.